Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining us this afternoon, we have Kevin Davitt, head of index options content at Nasdaq, as well as Brent Kochuba, founder of SpotGamma. We're here to discuss how investors look to protect their position around headline moving events using option strategies. It's great to have the both of you with us. Welcome to Trade Talks. I'm going to kick this off with Brent. We're into arguably the most important week for third quarter earnings in terms of market cap reporting. Many investors look to protect their position around events like earnings using options. Brent, can you frame up the current options market in a few sentences, and what are we seeing in terms of volumes and impact?
There's massive volumes in the Mag 7 names, all those top NASDAQ names that we watch every day. As you mentioned before, a bunch of the Mag 7s. In fact, Tesla is the only one that's not reporting. So Wednesday, we have Microsoft, Google, and Meta reporting. Then Thursday is Apple and Amazon. And so people are bidding call options, in particular in this environment, at very high levels relative to the index. And what that essentially means is that the way that people are playing upside in this market, not only through earnings, but through the AI story, and then expressing positive of changes out of like the Trump Z meetings are coming up. They're buying single stock call options, particularly in anything related to the semis. And that is really raising those call values by quite a bit.
Kevin, what impact do these options values have at the index level?
So Brent alluded to a dynamic that has been kind of prevalent for the better part of the past couple of years, where broad equity volatility is arguably rich compared to index volatility, which remains muted. That has been that low correlation, higher dispersion market has been characteristic of the broad market for quite some time. Bigger picture, that your audience likely knows that short dated index options like NDX have kind of been at the tip of the spear since every day was available for investors. From my perspective, the significant pickup in individual investors and traders using index options is fascinating. In conversations with that demographic, they overwhelmingly appreciate the cash settlement element, which is distinct from single stock or ETF options. And there's a growing cohort that really understands the potential tax benefits that we typically refer to as 1256 products. Bigger picture, markets seek stasis. And so one way to express that, like Brent kind of laid out, is through dispersion trading, where end users might own some idiosyncratic risk, be it in the AI area, and maybe offset some of that potential option risk in the index market. And I think that trade continues to grow.
Yeah. So, Brent, with that said, what role do you think same day options or zero TTE options are having on intraday movements across both the indices and single equities?
We see zero DT strategies typically buy dips in weak markets. So that is one stabilizing effect. And by and large, I believe that's what it is stabilizing. The second one is the percentage of volume continues to grow. And so there are a lot of strategies, be it high frequency or retail traders, that will come in during kind of quiet or calm times. And they will trade 65% of volume will be in these short dated zero DT options now. So there's a lot of these strategies that are either expressing a view in the NDX itself, for example, or they're doing things like playing a Tesla or Nvidia short dated options versus zero DT on the index level. And so those strategies are very popular. And then if risks start to flare, kind of known unknowns like a geopolitical risk or a tariff risk comes, then typically those zero DT options disappear. That volume disappears for in favor of longer dated put hedges and things like that. So the flow in zero DT very much seems to be associated with the amount of risk that's perceived in the market.
Yeah. Kevin, anything to add there?
Just from an end user perspective, I rely on my Spot Gamma access to periodically identify some of those dislocations or potential dislocations in the market, and then elect on Brent's point about the sometimes amount of volume that's concentrated in these short dated structures. Relative to something like SPX, the NDX percentage of the overall mix is actually higher in zero DTE options. Now, from my perspective, that speaks to the inherently attractive element of the higher volatility that we typically associate with the Nasdaq 100. So it's something that I would call a feature, not a bug. So the vast majority of the trading we see in NDX.
Mhm. Okay, Brent, let's go back to you for a moment here. We've been discussing the Mag 7 and opened the conversation with them. Are these names really moving the markets, and how are options playing a role here?
Yeah, well, I'll give you an example. We have a chart here called Compass, and what you're seeing here is the relative value of calls versus puts. And so what traders are doing is they're positioning very strongly into call options, as we alluded to before, and that is giving traders leveraged upside in these names that are moving the most. Obviously, if you have that exposure to the AI semi component of the market, you are vastly outpacing say an equal weighted basket that has more industrials or some other sector in it, right? So that's really the strength of the NASDAQ positioning, as well as 40% of the index now is tied to that semi AI space, which is just really leading the markets here. And so you can see when people start to bid up call options and will hit these extreme levels, which is obviously a short-term, which is oftentimes, excuse me, a short-term topping signal. So you can really watch the values of these call options to help map out sort of extremes in bearishness or bullishness. And that's been an effective strategy during these times where especially you get so much momentum and short-dated activity in the option space. You really get great, again, overbought, oversold signals from watching the implied vols of options.
Right. And Kevin, do you view the overwhelming attention on a handful of the mega cap tech names? Is that beneficial, risky, or is it something else entirely? Oh, looks like, all right, Brent, we're going to go back to you with Kevin frozen here. So let's wrap this up. How do you think investors are using the options markets broadly to potentially take advantage of high profile stocks that are less correlated?
Yeah, and just a quick point on the previous question you had there. GDP is being driven right now by the data center growth and the AI growth, right? So it's a concentration in those names, which are the names that are so strong in the Nasdaq, but that is driving the economy in a major way right now. So that seems to all make sense to us. And then as far as the question about how are investors using options, it's a great market now to have exposure to both tails, right tail and left tail in this market. We could easily see a big Santa Claus rally here. And so investors can smartly get exposure to a huge market rally here, as well as a big sell-off. If there is let's say the Trump Z talks, for example, don't go this well and there's a big sell-off, well, put options are great, but also that right tail right now where people are positioning for the AI story, for positive news out of the Trump Z meeting that's coming up. And you can sensibly get upside exposure for very reasonable levels, as you see in our calculator here, where you can incorporate implied vol, you can put on call spreads, you can position in things like the Nasdaq, where you're getting 40 or 50% of your exposure is tied to these semi names when buying, say, NDX call options, and that can really set you up very well to keep track and outpace the upside in the market. And so we love buying options, be it calls or puts here, with the prices that we're currently seeing in the options market.
All right, Brent, Kevin, appreciate the insight. As always, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.